More than 95% of your losing trades can be eliminated if you spot the right direction in the market. You can make money with a bad entry provided that you have the right direction and stop loss in place, while the opposite is not true. No matter how sniper of an entry you have, if it does not align with the overall flow of the market, sooner or later you're going to get stopped out of the trade. The problem is people put too much emphasis on entries. Everyone's looking for the secret entry pattern which can give them crazy risk to reward ratios, that they ignore the most fundamental aspect of any trade, which is for the markets to move in their favor, they need to have the right direction in place. So in this video, I will show you how to find your daily bias in less than 2 minutes. Finding your daily bias should not take you longer than that, and I believe people in the online space have overcomplicated this issue without any reason. You don't need advanced ICT concepts to predict your daily bias accurately. Using the method I'm going to teach you today, you can easily have an accuracy of 60 to 70%, which is more than enough to get you profitable. I will present to you two approaches, find the one that resonates the most with you, and if you combine both, you'll be unstoppable. So first, let's head to the board to learn these concepts, and then we will get to the charts to apply whatever we learn. Alright, so there are two ways to find your daily bias. The first one being using candlestick patterns and structure, and the second one is using FPGs and liquidity. If you are a beginner trader, I would recommend you to stick to candlestick patterns and structure only, as I personally have been using this concept for more than a year and have had a decent success rate with this. So as you can see, it is a simple yet effective pattern, and we use candlestick patterns and structure in the weekly, daily and 4-hourly only. We don't go anything below this, because if we go to 1 hourly or 30 minutes, candlestick patterns at that time frame won't be that effective. But the main time frames we'll be using will be weekly and daily. 4-hourly will be more of a supporting one. And now moving on to the second way, which is something that I recently incorporated into my trading plan, is using FPGs and liquidity. And the beautiful part of it is it helps you to find your draw on liquidity. So DOL stands for draw on liquidity, and it does helps a lot to find your daily bias. With this approach, we only look at weekly and daily, nothing below that. If you want, you can also look at monthly chart, but I personally don't look at it because since we are day trading, we don't really need it. And as you can see over here, if you combine both, you will be unstoppable. And in this video, I won't talk about what are FPGs. If you want a separate video for that, do comment in here and I might create a video on that in the future. But now let's get on to some of the examples using these patterns. First of all, we'll get to the type 1 using candlestick and structure and how you can use these to find your daily. So first, if we go back, this is an example of type 1 as you can see over here. And this was a gold chart. For this week, let's head on to the weekly chart, and weekly we closed bullish as you can see over here. We had a support zone, and every time price came over here, it went back up. It came here, went back up. After it came to this level, we had this bullish engulfing pattern, that kind of a candle that went up, closed down, this hammer, and then we had a strong impulsive candle. If we even look at the daily time frame, after the close of this weekly candle, we also had a break of structure in the daily time frame. So before this, price was in a downtrend, creating lower lows, lower highs, lower lows, lower highs. And here, the last lower high got broken. So it says that now price is ready to go in an uptrend. And now if we have a look at what the next week was, as you must have guessed, it was a bullish candle as you can see over here. And if we even have a look at the 4-hourly to look at how we could have entered this trade, let's see, after this break of structure, we had this beautiful support zone over here, and see, price broke out and prices does not move in an impulse move. After an impulse move, it retraced back to this support zone and it created this double bottom. You don't need double bottom. I mean, if you even have a look at these wick rejections over here, it comes back at the support level, has this wick, and then it went towards the upsides. This would have been a pretty solid trade from here on, following from the weekly time frame that we marked from here all the way to the daily. And if you even wanted, you could have scaled down to the hourly or 15 minutes to get better entries.
but I hope you get the point that using the weekly time frame where we had the strong momentum candle, we could predict the next weekly candle to be bullish, and that is what exactly happened. Now moving on to another example using the same concept and on the same chart. This is gold once again. And as you can see in the weekly chart, we are overall in an uptrend, creating higher highs and higher lows. Though we don't look at structure in the weekly time frame, all we look for is a candlestick pattern. For structures, we better look at the daily time frame. So as we can see over here, where in the weekly time frame, we had a very strong candle towards the upside, similarly like the previous one. So what do we expect? After this strong candle towards the upside, we do expect price to create another candle in the weekly time frame, and another bullish candle in the weekly time frame will give us a lot of opportunity to enter our intraday trades. If you even look at the daily time frame, we had structure supporting this trade as well, as we were creating higher highs and higher lows, and price was breaking through these highs and creating new higher lows to follow through. And now we have a look at what happened after this weekly candle, and as you have imagined, we got another beautiful momentum candle towards the upside. And if we will have a look at the 4-hourly to see any potential entries, as you can see, this is where we marked the break of structure, and after this break of structure, price went up, higher high, higher low, though we could not have entered any trade over here since there was no support. But once again, price broke through this resistance, creating a higher high, creates another higher low, higher high, higher low, higher high. So you would have got a lot of opportunities to enter trades over here. You could have easily got a 3-hour or 4-hour trade in the lower time frame, another entry pattern over here, and then price went towards the upside. Now that we saw two examples of type 1 using candlestick and structure, let's head on to type 2 where we use FVGs and liquidity. So this example over here is a recent example on GBP USD, and I was predicting upwards movement on GU. So if we have a look at the weekly time frame, we had this FBG lying over here, and after we came back to this FBG, our next draw on liquidity becomes the next swing point over here. And if we even apply the previous concept that we learned, so as I said that if you combine both these concepts, you will be unstoppable. We had type 1 over here as well, since we got this strong momentum candle engulfing almost 6-7 candles over here, and this candle came from a weekly FVG. So both the types available in this pair, making it a high probability trading condition. And if we even have a look at the daily time frame, before price came to this key level, it was creating lower lows and lower highs, signifying a downtrend. And then we broke through this last lower high to create a higher high, and then we were waiting for a higher low before price could be attracted towards this draw on liquidity. So if we have a look at the weekly chart, and again, as you must have imagined, the next week we followed through, we took out this draw on liquidity, and after this momentum candle, we got another momentum gap. If we even have a look at the 4-hourly to look for potential entries like we did in all the previous ones, all we are looking for is a higher high, higher low. After every impulse, we expect a retracement, and that is exactly what happened over here as well. After price did this break of structure, price impulsively went up, and then it retraced back to this resistance once broken. This was more like a higher high, higher low, higher high. This would have been a higher low, which perfectly aligned with this swing point. Then we got so many beautiful patterns over here, like engulfing pattern. And after these engulfing patterns, the follow through was beautiful. Price impulsively delivered, as we can see over here. Price impulsively delivered towards the upside. So this was an example where we combined both type 1, where we are looking for momentum candles in the weekly time frame, and structure to be followed in the daily time frame. Plus, we also had the type 2 pattern over here, the weekly FPG, which acted as a point of interest or PT array, whatever you call it, making it a very high probability trade. And I was very bullish on GU. It was the previous week's analysis. Now let's head over to the charts to apply whatever we learned. So for the sake of this video, just so it does not become too long, we will just have a look at gold and GU, as I mostly trade these two pairs, and analyze the weekly and daily time frame to find our daily bias. Currently it's Tuesday, and as you can see, I had already marked that gold was strong bullish. Now let's head over to a clean chart to understand why I was looking for bullish momentum on gold. And I also had this level marked, as you can see over here. This target point and price exactly went till there and retraced back down. Now let's head over to a clean chart so that I can show you why I was looking for an upwards movement on gold, and you yourself can predict what can happen based on the concepts that we learned. I did not apply anything new in. So now here we are on gold, and if we get on to the weekly time frame like we always do to find our daily bias, first of all we had this trend line as we previously saw, and then we got this beautiful weekly candle close towards the upside. So after this momentum candle, we got this follow through, and this follow through was also a good momentum candle, making me to think that the next candle can be towards the upside as well. Another confluence that I had over here was this could be a liquidity over here that price could be attracted to. And if we have a look at the daily time frame right now, as we can see, the daily time frame is also in an uptrend, creating a series of higher highs and higher lows, higher highs and higher lows. So I expect upwards movement in gold. And now if we scale down to the 4-hourly time frame and mark a few of our levels like I had in my chart, this is a level over here since price broke through this resistance, and it also retested and met our target on this swing point. Though I could not get any entry over here since this was over on Friday, and Monday price opens here and shoots all the way towards the upside, so I did not get any entry pattern. But I'm still bullish on gold. Looking at the weekly time frame, and the daily, creating a series of higher highs and higher lows, and also the 4-hourly looks pretty good. If we draw a fib from here to here, as you can see, price came to this 50 and 61.8, which is also called golden zone, and mostly people target 27 level as fib extensions. So price exactly goes till there, and now it's retracing back down. Now following for the next couple of days, if we mark a few more support and resistance zones in here, this is a very good support zone that was broke through, is now acting as a resistance. So for the rest of the week, I will be expecting gold to follow through on this uptrend and break this level, retest this, and ultimately shoot towards this strong liquidity. So our bias on gold overall will be towards the upside. And now if we have a look at GBP USD on my chart, as you can see, GU also, I'm expecting it to move towards the upside. So first let's head over to a clean chart to see why do I think so. Let's get to here, and now if we go to the weekly time frame, let's clean things up first. Yeah, so moving on to the weekly time frame, if we have a look at the previous week's candle, it was very bullish towards the upside. A strong momentum candle with zero wick. I mean, we just had wick from the downside. There was no wick towards the upside. So I'm very bullish on gold. Though the only concern that I have is like a price does not move impulsively in one direction. After an impulse move, we need to get a retracement for the markets to continue back. So if we have a look over here, gold is kind of an overextended market because for the last 2 weeks we got 2 back-to-back candles towards the upside, but overall our bias will be towards the upside on GU long term. We can play some reversal trades from here, but it could be a bit dangerous. If we even have a look at the daily time frame, daily is also bullish, creating a structure of higher highs and higher lows, higher highs and higher lows. Daily time frame, we do have a few FVGs created over here. So what I think can happen is GU can retrace back to this FVG, which also aligns with this resistance zone. As you can see over here, this was a very good resistance zone. Every time price came in here, it went back towards the downside. Again, we got this rejection over here. And if we even plot our fib from the low to the high. Let me grab my fifth tool from here to here. This zone also aligns with our golden zone. So this would be a high probability upwards trade from here on. And if we have a look at the 4-hourly right now, what I think can happen is this level can act as a liquidity point, since a lot of stop losses can be placed over here as price is in an uptrend, creating higher highs and higher lows. So price might clear this liquidity to hit this daily FPG and head towards the upside. Either way, if it does not clears out this liquidity and if we start reacting from this demand zone, which looks pretty clean as well, I'll be looking for entries in the lower time. So that's it. This is how I analyze my charts and look for the daily bias using the weekly, daily and the 4-hour.
Now that you have learned how to find your daily bias, I can guarantee you that 90% of your trades will be in the right direction. But you know what? Finding your daily bias is just a small piece of the puzzle. Daily bias won't help you to make money. A strategy that incorporates the daily bias will help you do. What's the point of predicting the right direction in the market if you don't have a clear strategy to capitalize on those movements? So if you want to learn the exact strategy I have been using to pass my funding challenges and get profitable, you can check out my previous video. In case if you also want to have a look at the stats of my phase 1 using this strategy, then I'll pin both the videos on the screen and will catch you guys in there. Till then, take care. Bye bye.